Hey everybody, welcome to Options with Hans. I'm Hans Albrecht, of course, 15 years as a pro options market maker, and then a decade after that running a whole bunch of income funds, downside black swan protect funds, and I'm here to help you level up your income game and your leverage game because we are also going to be launching Turbo Trader Pro, that new income scanner that I've developed over the years. There is nothing like it on earth. It is 30 years of what has gone on in my brain: options arbitrage, vol arbitrage, options market making, running a whole bunch of funds and realizing that that industry just has no clue what it's doing. Well, it's not that it doesn't know what it's doing. It basically doesn't care about performance. It's all about keeping it very simple so they can focus on making as much as they can, grabbing more assets and grabbing more of those fees. And it's no surprise if you look at any of those charts, those products perform very, very poorly. So I've really based my entire career on improving that outcome. You've got to know how to do it. And the Turbo Pro scanner is an absolutely revolutionary moment for the industry and for those who are going to jump aboard and join me. So again, everything today is for educational and entertainment purposes only. And if you're okay with that, let's keep going. If not, we will see you next time. So what an interesting market we've had lately. We had that big flush. Let's take a look at the S&P. We'll talk about some of the wins, some of the not as much of a win, although, well, we haven't had too many of those. But let's take a look at the SPY. I've got this sort of weird kind of think or swim thing going on here. So I apologize for that. I don't know how to get rid of this part over here. I have to figure it out. Look at the SPY came down here, just breached this sort of low and then pushed a little bit lower. I was looking for about 655 on the SPY, and we got very close to that. And then really we started to bounce. So there was a big flush out. We saw a lot of that high beta area, which I warned people about. I said, I'm out of high beta. I think there's going to be more of a flush. When the Nvidia earnings came out, we had a reversal that we've only seen 2 or 3 times in history. And I said, we were up huge that afternoon after the earnings. And I said, I don't believe it. On a public show, I said, listen, I do not believe it. I think we are not going to hold because there's more of a flush out to go. Well, it turns out the flush was the next day. Boom, boom, boom. Massive reversal. Little bit of a lower touch the next day. And then here we are starting to march back and climb that wall of worry. We've now come back. We're above the 9 EMA, which I always feel is kind of an interesting spot, right? So if you look at some names, many names, in fact, you can see they come down. They sometimes touch that 9 through there, but close much lower. You can see touched it. So I really don't get excited about anything until I sort of see, number one, I want it to be above the 9 EMA. I mean, you can pick bottoms and all that, and you can make a trade and you can get lucky for sure. There's no question. If you really love a stock, then you get in. But if you're looking for something with stability, which is always part of the income game for me, you want to look for lots of different things in the volatility metrics, in the technicals. You want to look at all kinds of things which I build into that scanner. So that it finds these things much more quickly, instantly. And so one of the things I like is we want to get above here. I'd like to see the moving average start to push up here. I don't have some of the other moving averages that I like on here. We can see the MTI was really nice and green until things fell apart. Lots of income trading in here. And then this basically right here, it said, get the heck out of Dodge. This is not a good situation. So let's see if this starts to turn yellow again. I like direction of my MTI as well, which is what you get as well. You get direction of the MTI. You get all kinds of good sort of momentum readers, along with all the other things that are built into it. So I'd like to see this kind of get going here. So that often is a kind of resistance that we see respected quite a bit when something's in bearish territory. And look what happened today. Very interesting day, because what we had was really kind of a broadening, a real beautiful broadening out there. Look at the IWM, which was not spared in the sell-off, but look at what's happened here. We've come all the way back above that 9 EMA, and we're above that sort of breakdown line that it pushed through to the downside. And now we're moving to the upside. We've kind of come across, we've broken out of this little sort of fairly weak downtrend line. And now it's looking really good. I've actually been adding positions in there. And today I started adding things in the broader area, because look at what's happening in the equipment area. We're seeing some hesitation, right? Even MU, which has been an absolute beautiful chip stock. I've been moving out of almost all equipment makers and into some other areas except for MU. I think that's just, they've got that pricing power because of the shortage in DRAM and memory. So the whole memory sector has been doing fantastic. And so that's bounced back. I think it has the potential to keep going because they're not going to keep this thing down going into earnings. What they are a little nervous about, and I got out of the last of my Nvidia around 204. I did not grab the high, but almost getting pretty close. And I've been out of it just because I feel that it's not, I've been saying on shows, it's not an expensive stock, but it's an area where I think it was 6 or 7 weeks ago, I said, I'm moving from the builders of AI into the users of AI, outside of some things like MU, right? There's some glaring areas. Google, of course, as well, which I've been massively bullish on for $100, not from the bottom, but for the last $100. And I sold a ton of it today. I have very little left of the Google because it is so far above its 20-day moving average. It's 9-day moving average even. I mean, this thing is really, really overextended. Is this going to be a $1,000 stock one day? I have no doubt in my mind that it will. They are absolutely eating the world. All the things that I've been talking about, the videos I put out, everything. These guys are the most vertically integrated AI company out there, and OpenAI better be very, very nervous about what these guys are doing because they are not acting like a massive company. They're acting much more nimble than that, and they're putting the pieces together. Probably the original founders coming back in to help. Sundar Pichai. I mean, there is some great stuff going on there, and of course, they have everything they need, right? They have endless data. They have YouTube, 25 years of video. I mean, they just are so good, and now they have the TPUs as well, which supposedly are quite sort of almost customizable, right? That's almost like a customizable silicon, which is apparently a little bit of a leg up on what Nvidia can do. Now, Nvidia is the king. They have massive market share. Nobody is counting them out. But think about how much Nvidia the world owns. Everyone owns boatloads of this. It is a massive piece of every index, and everyone owns it. And for that reason, it's not that it's extremely expensive. It's not that the story's over. This thing is probably going to rally back and go over 200 at some point. But remember, the markets likes to react at the margin. And at the margin right now, it is a story that has some cracks in it. It is a foundation of what was for years incredible strength, and we're having another one of those moments. But even worse than the DeepSeek. DeepSeek was kind of a broad base, everyone's spending too much money, and is this going to work out? Is this going to pay off? This is almost a little bit specific to Nvidia insofar as that there is more competition now. There is a dispersion going on in the semiconductor area where there are more winners and losers, right? So this is what's going to happen in this sort of phase of technology, right? So there's the early phase where everyone's really, really excited about AI. Everyone's excited about the picks and shovels, the builders, that, this build out that's happening that is absolutely going to continue for years. But at first, it floats all boats, right? Everyone does well. Everyone enjoys the excitement. Then at some point, the competition starts to pick up, right? Now it's like, hey, we're not so friendly anymore. Josh Brown talked about this, something like this. He said, look, you're going to get to the point where people are not so friendly anymore. Now it's going to be, we're playing to win, right? We're playing to win. And you're seeing a lot of alliances. You're seeing a lot of companies get together and plan for that next 50 years that is ahead of them, because that is what this is all about, right? I use that word existential, and it's hard to, existential. Does that apply to Google or Microsoft or Amazon? I'm not saying they're on the brink of an existential disaster. I'm saying they need to set themselves up for the next 50 years by making all the right moves and doing all the right things. Look at the panic at Oracle. They are doing absolutely anything to make sure that the next 50 years are okay, and they're probably overstepping, and that's going to be possibly a very, very big problem for them. So there is a pressure out there. There is an urgency out there for companies to get involved. So I think the bloom is off of Nvidia right now. Would I be interested again? Yeah, I think it could get down to into the 140s perhaps. I think this could be really interesting in there. And then I think as we start to head towards earnings again, so it just depends on the timing of this. If this happens quickly, probably I'll just kind of wait and see. But as we get closer to the next earnings report, I'm pretty sure they're going to start kind of buying this up into the report. So it's going to be very interesting. But look at what's happening out there. Now, Google, of course, got out of a ton today. I think I got as high as 325 on options and stock across all my accounts. Just kind of, it's a little bit overextended. Again, I love it, my favorite company out there. But I've been moving into some other things, right? So I've been picking up some technology. I've been picking up some Nebius. I've been picking up some Hood, right? Even though Hood has exposure to crypto, this is a company that is going to continue to do really, really well over time in that wealth management area. They're very nimble. They do all the right things. And they're going to be a recipient of so much of that incredible wealth transfer over the years. And so, some of the other ones that I like are the data ones. We have Snow, as you know, I like Snow very much. Datadog has really filled in. Palantir has really, really filled in as well. But I think this is going to be a market where it is a little bit more about the broader market right now, right? So what I am feeling out there is that there's no question tech is going to be around. You're never going to make much money counting out tech and certainly counting out AI. But I think this narrative that I've been talking about for months, which is eventually the benefits are going to spread. So we're starting to see a little bit of benefit from, we're seeing the sort of mid-cap area start to benefit a little bit more profit margin-wise. That's going to start spreading to the small cap area. And so the benefits are now spreading, right? So this is part of the big positive in AI is that ultimately, even though there's some questions surrounding employment, there is going to be this sort of spread of benefits throughout the economy. If you think about the productivity, the efficiency, the ability to do more with less, the ability to do much more with what you have, it's just going to be incredible for those who harness that power. And so that creates a very interesting outlook. So I'm not that interested in crypto right now. I've not touched MSTR since it was about 360 or something like that. I'm just not interested in those areas. There are more interesting places for me to be until I start to see something positive. Why? Here's another example, right? Here's your 9-day EMA, kind of gave you a head fake here, but came back down. It's basically spent this entire time since early October under the 9 EMA. Why get involved in this when it is just absolutely exhibiting almost no positive behavior? These little moves up completely fail every time, and for the most part, it stays under that 9 EMA, and it is just a complete disaster, right? So I'm not that interested in anything that looks like a disaster. What I am interested in is things that are going to benefit from this new world, which is the banks. We started to see, I'm not sure I love the home builders, but look at the move today on the home builders. I just saw this earlier. Look at that. Oh man, what a move that is. That might be something interesting to pick up on pullbacks. I don't know. We'll have to see. I don't know if that area is really going to explode. Pulte's another one here, another nice move there. And then this is the 3-time home builder ETF. What is that lumber or is it? No, it's 3 times home builder. So nice move off the bottom here. I could see this getting back up into the mid 80s, something like that. So there's probably a play here. But what I'm going to be doing is I've been worried. So in Leaps Trader, in some of the services that I run, I've been saying, you've got to be careful right now. So people have been saying, why are you buying stock? I have not been buying options so much. Why is that? Well, you've got 2 things happening. You've got a market that is a little bit more range bound. Now, maybe that's not true. Maybe we have a big push into the Christmas holidays. I think it'll be more or less a little bit gradual with a little bit of 2 steps forward, 1 step back. I feel like it's going to be a bit more of that. But if we are a little bit more range bound, we could get a little bit of, number one, we're range bound. Number 2, there isn't that sense of explosion potential to the upside yet. Probably next year. I think the mania returns next year. But right now, there isn't that explosion. So you take out the technical aspect, which is maybe we're not going to explode higher to make new highs, maybe, and you take the fact that volatility is pricing in some seriously big moves. Here's Micron. So I've been talking about this over the months. I said, look at this move. I made a ton of money on this thing. I made a whole bunch of money on some long calls, and then I got out of a whole bunch of them, and I got into some others and out, in and out, in and out. But this thing just kept going, which was a sign to me of extreme excitement. And sometimes it's a sign of exuberance that you want to heed. You want to be very careful when you start to see upside calls get bought aggressively, which is really what happened before that beta sell-off, and part of the reason why I said I'm getting out of almost all of my high beta, and hiding in Google, Apple, Micron. I went to hide in those balance sheets and those strongest stories. IWM, which had a little bit of a dips, but hiding in those places. And I said, that's exactly what I said. I said, I'm going to hide in areas that are less exuberant, right? We saw those retail option volumes basically go straight up and parabolic. We saw upside call skew, which I talked ad nauseum about, is always a sign that there's a little bit too much excitement. Does it mean it's going to stop on a dime? No, but it's a sign that once everybody's in, right? You look at the cash positions for managers, for hedge funds, the cash positions went to multi-year lows as far as I can remember. I can't remember the chart. I'll pull it up for you here. But really, everyone's in. So when everybody's in, everyone's on one side, on one side of the boat, then, you sometimes capsize, right? So that's what's happened. But look at what's happening now. We're starting to crack in those longer term vols. There's no reason for this to be up here. It's reflecting a world of incredible disruption and possibility. So I agree to that extent that they were stupidly low here, which is what I said at the time, and why our members made a whole bunch of money on this stuff, because they were stupidly low and not recognizing the possibilities out there. But now that we've had this move, and Micron is one of the unusual ones, right? So I can give you unusually strong. So if I show you Amazon, this is Amazon here. So I'm going to take out this historical volatility, and you can see this is starting to crack as well, right? So not just after earnings, it's just cracking because this is not that sustainable. Look at the level of option pricing versus a crash last April. That's when the market went down 1,000 points, which, by the way, my MTI indicator went red at 59.50 before it dropped 1,200 points. But don't worry about that. That's built into the scanner. But look, we're at the same levels we were during a crash, except this is a crash up. Right? So I don't have to go over all that again for you, but this is extremely unusual, but it's starting to crack a little bit. So what that gets me excited about is doing some upside plays that are not looking for massive moves to the upside, but that are looking for measured moves with a continuation of a relaxation of implied volatility of option pricing. That means you can do things like call spreads, even ratios, which I wouldn't recommend to anybody who isn't literally finger on the trigger, like a 1x2 call spread. You can do things like what's much safer would be an upside butterfly, broken wing butterfly. You break that upside you bring that upside a little bit closer, that upside leg, and you basically pay a little more, but you give yourself a beautiful move. I'll show you one that we have in Google right now. Look at this move here, and let's see, do we have the trade here? Yeah, so here's the trade we have on today. So I thought this was kind of cool. We got into this. Google pulled back, right? We had this big exuberance after the earnings. We pulled back a little bit. I didn't do anything about it. That's the nice thing about these flies is you don't invest too much in them, and they really kind of hang around and can kick in, right? In fact, you can buy back one of the short calls. I didn't do that. I wanted to keep it on there, but basically now we're back into this range here. So look at what this looks like. This is your tent of possibility, right? So don't get too excited about that. A lot of people look at the tent of possibility in a fly and sometimes ratio trades, and they go, wow, I can make all this money here. But you rarely wait till that final moment when you've got all this gamma, and it's just generally not done. You can certainly wait, and every now and then you're going to pin a level and you're going to make a fortune and you're going to be a superhero. But most of the time, you're not going to let this thing go to expiry. But look at what's happened here. We've overshot to the upside. I started getting out a whole bunch of my positions in Google. I don't have very many left. And I've been shifting into some other things that have had good moves as well, right? Google's continued to do well, but other things are starting to react, and I feel like there's another opportunity right now. MAG is very tired. Now that Google's had its move, MAG is a little bit tired, right? I think Microsoft probably has a little bit of a rally left in it. I think Amazon has more upside to it. Apple is another one. I haven't gotten completely out of that one. I think that's you got the Christmas part of it. You got AI in your pocket. Like that's a good one. But look what happened here. So now we've got this long 290, short two of the 310s, double the 310s. I have more than 1 and 2 and 1. But you're long one of these, you're short two of the 310s, and you're long one of the 320s to basically hedge hedge out that extra short call there. So what happens is you have this structure that actually, the reason I like to break it as typical fly, if the stock goes too far, you're actually going to lose money, right? So it's going to look typically like this, and you're going to make money only within the tent. And I'm not interested in waiting and waiting and waiting and hoping that I'm going to find a needle in a haystack. And basically, it's kind of like threading a needle, right? When you have a regular fly, if it's not too wide, you're kind of saying, boy, this thing's got to go here and stay there. I'm not that good. I don't think things necessarily go and stay. But what I will say is that I've given myself upside here, but it's overshot to the upside after an incredible run. And I had a couple of clients and members say, listen, should I get out of this position? I said, look, a win is a win. You're up, I don't know, 70% on this position right now. But think about it this way. You may have a little pullback into the pocket. This is the pocket of possibility. Number one, Google is absolutely in play. It maybe could get down to $300 again. I don't think it's going to get into the 200s very easily. So we have a floor. So what that does is it kind of, in my view, sort of protects the downside here. Because if it keeps going down, it goes back down to 270, 280, then you're going to give up this win. But I feel like the floor is in because it is so in play. People just cannot stop talking about Google, and for good reason. It is unbelievably positive, that story. So you've got a floor, but at the same time, it's had a big run. So you may have some people starting to get out of this position because they've had a good run, and maybe they're not doing as well on Microsofts and Teslas and some of the other things. So what do? You got to sometimes liquidate. You got to raise money and pay for some of the other things. Maybe you got caught in crypto, whatever. That's what we had a little bit this earlier in this big sell-off, right? It was a liquidity event. I went on the record. I said, listen, has nothing to do with AI or the market being in bad shape. Fundamentals are terrific. They're fantastic. GDP, employment's okay, as according to some of the data. We'll see how that shapes up. Really, profit margin's fantastic. And wonderful things to look forward to in terms of what AI is going to accomplish. And this broadening that I'm talking about, things are not bad. I said, this is a flush. That's why I said on that Nvidia pop, I said, I don't believe it. I don't think the market can rally here, even though it was already rallying. The futures were up huge. I said, I don't think the market is going to stay here because there is more unwind to come. Boom. Had one of the biggest reversals that we've seen ever in history. So I did not call for the biggest reversal in history, but I said this isn't going to hold, and it didn't. But now we flushed it out. That is another reason that we are seeing the volatility relax. What happens when there's pent-up energy, when there's that incredible energy in markets because people are, they've bought these stocks that are up 5, 6, 7 times. They've made all this money. There's so much speculative money sloshing around. That keeps vols high, right? Because they're long those calls. There's volatility out there. There's the possibility of a pullback. Volatility likes to incorporate those things. Now that we've had the flush, what have you done? You've taken out some of the fast money. You've taken out some of the speculative money. You've had a whole bunch of people who maybe got into this run a little bit late and have now gotten kind of smoked. You've taken that out. Now the coast is clear for vol to start giving in, and that is what happens. So I've been telling members, I said, I'm not buying options over the last 7 to 10 days. I'm not, because of those two reasons I gave you earlier. It just feels like vol is finally going to start coming in, and it is doing just that. And part of that is we've had the flush. I believe Bitcoin's probably closer to the bottom than the top at this point. So that's still a little bit of an overhanging question there. So what we have now is a possibility for you're sitting right in the pocket here. You're sitting right where you want it. Either this thing's going to stick around up here and you've got this maximum win, which is great, or it keeps going and you're going to make money no matter what because of the way this is structured, or you're going to pull back into the pocket towards maybe 300, 310. I've got to take a look, see if there's some sort of put walls, call walls that are maybe going to kind of help to sort of pin it here and to lend a little bit of extra support. But basically, my view is that we could easily pull back to 310, 308, 314, and then we sort of sit around here. So we've made the delta money, right? That's direction. We made that money. Now we're going to wait for a little bit of that theta to come in and that Vega to help us out as well, right? So this is one of those trades I love. When vol starts dropping, which is what's happening, these types of trades did very well back in May because we had that very high level of anxiety and the super high VIX. And what happened is the market started to sort of march upwards, the volatility compressed. So these broken wing flies did really well. I did some on Goldman. I did a whole bunch of them did really well. And so now you've done the hard work from a movement standpoint, directional standpoint. Now you let the other Greeks take over. Delta did its job. Now the theta is going to start to take over a little bit, and especially the Vega. Theta takes time, right? Theta is just going to happen over time. Sometimes theta takes more time than I'm willing to give something. But what I will give this thing a chance is that Vega is going to help me out if vol just keeps dropping. And as we're starting to see across the market, vol is dropping, and that's it. The news is out on Google, right? And it's found a spot where it's probably considered maybe a little bit overdone for now, not in the long term. So I'd like to see this thing drop back into the pocket a little. It's going to cost me a little bit of money on Delta, but this thing's going to start moving up towards this tent in here. And once I'm up around, if I'm up around here, I'll probably start taking it off and call it a day and reallocate that capital to something else. So I think that's really cool. But if you look at all the last thing I want to say here is if you take a look at some of it feels like they're moving a little bit into the real world a little bit. Look at Upwork, which I've loved for a long time. I think that's going to do well as people hire freelancers to do a lot of AI work, coding, Figma stuff, all that stuff. My Figma call has been not very good. I'm really not happy about that one, but I'm thinking of adding to it. Upwork, and again, in that housing theme, take a look at Rocket, one of my favorite companies. This is a beautifully vertically integrated company that is absolutely set for a recovery in the mortgage market, in the housing market. And guess what? Some of the other things, I don't talk about these very much because they're not very exciting, but look at some of the rate play stuff. Look at that coming off the bottom here. I've been adding in here. I added a bunch back here. We gave it all back, probe the bottom, and now we're starting to, this market is starting to get very convinced. We're about 83-85% on the CME futures for that rate cut in December. I think it's going to move up towards 100 and we're going to get that rate cut. So this market is telling you that it is really looking forward to getting that rate cut. And that was one of the overhanging things. I said, that's not the only thing. I don't think the market's about Nvidia, and I don't think it's as much about rates as people think. That sell-off was about a flush of leverage, of fast money, of animal spirit money. That had to play out. It just had to play out. That's how this stuff goes. I've been doing this for way too long. I've seen that happen many times. So here we are, a nice move down in rates. Remember, if something like this is your intermediate term corporate bond index. So when this is moving up, it means they're buying those bonds. Rates are coming down because they're anticipating a relaxation. Here's the longer term right here, bouncing up again. TLT is always kind of a tricky one because it sort of reacts a little bit more to some of the shenanigans going out there and deficits and stuff, and sort of some of the foreign ownership, et cetera. But I don't touch that very much. I like to play these other ones that reflect the possibility that rates are going to continue to come down, which I think inflation, AI is incredibly deflationary. You can now with Nano Banana, you can make a picture for 1 penny. You can make a thumbnail for basically 10 cents, 20 cents, 30 cents, however many times you want to sort of, figure it out. It is an absolute incredible thing. Something that used to cost you 30, 40, 50 bucks on Fiverr, now you can do it for 10 cents, 15 cents. AI is going to be incredibly deflationary. It's going to be deflationary on many areas of wages. It is going to be deflationary in many areas. So I feel like this is sort of a market where you could continue to see rates come down. Here's Zillow. Right now, Zillow sort of coming out today and saying there could be, some people saying there could be a pretty big price drop. Well, guess what? These kinds of companies, whether prices are going up or down in the market, they benefit transactionally, right? They're going to benefit from buying and selling. And so they're going to do well. So Rocket, Zillow, very interesting. And then these banks, and I don't love sort of personal lending as much because I think there's some potholes there. I like JPM. I like Goldman Sachs. I think they're going to make money from the IPOs, from deal making, from efficiencies. They're finding ways to save money. These are the smartest guys in the room. I will always bet on them to find a way to get involved in stablecoin, things like that. They're absolutely going to find all the ways to participate in new technologies. So that's it for today. I know that was pretty long. I hope that gives you sort of an idea of what I'm feeling. And again, Turbo Trader Pro income scanner. There's never been anything like it. Nobody has ever built anything like. There are scanners out there, and most of them are probably a whole bunch of bollocks. This is it. This is the stuff. I take pride in everything I do, and it is going to be an extremely nice price of just under $3,000 a year. You're going to get classes every week. You're going to get courses. You're going to watch my positions. You're going to get alerts, and then this thing is very quickly going to be up around $7,000 to $9,000 a year. So this is it. We're taking 50 people only. This is your chance. Get in there and enjoy the scanner. You can use, you're going to have your own membership login. You log in, it's like a piece of software. Anytime you want, 24 hours a day, you go in, you can look and see what's going on, what look like good income trades, what look like good turbo trades. Turbo trades are that upside, right? Because anybody who knows me knows that I hate to give up upside. All these, guess what I'm starting to see more and more people talk about? They're like, oh, you got to own leaps, you got to own leaps. This is after people getting crushed, basically making this much money on income over the last year and giving up so much upside. All these smart people who thought, well, that's the greatest thing on earth. We're going to just make tons of income. I'm making money on all these cash secured puts. Yeah, that's great, except you gave up massive amounts of upside. What's the problem with that, Hans? Well, the problem is you are putting yourself at risk in risk markets. You're in risk markets because you want to enjoy the benefits of the great American capitalist system of profit margins, of innovation, etc. You're not putting yourself in markets to make a little bit of money and retain all the downside. So there comes a time, and that's where the MTI comes in. That's where all my sentiment indicators come in. That's where all the 10 different metrics, each one has a number of sub-metrics, come in to find those best trades and those best setups for you for both income and when we want to get greedy, when we have to get greedy. It is turbo time. So everyone, check it out. I'm going to put the link down below, and thank you for watching. I really appreciate it. I know that was a long one. I'm going to have to put some chapters on there, and bless everybody. Happy Thanksgiving, and we will see you in the program, I hope soon. Otherwise, I'll see you in the next video, and stay safe. See you soon.